The world's most critical oil route is under fire, and your portfolio is in the crosshairs. As the US-Iran conflict escalates in March 2026, Brent Crude is surging toward $100, threatening a global energy shock not seen since the 1970s. But while traditional markets bleed, Bitcoin is facing its ultimate test as digital gold. Is this a market reset or the buying opportunity of a lifetime? Today, we analyze the cold, hard numbers. Welcome to Finance Investor Lab. Before we dive in, this video is for educational purposes only, and based on current geopolitical developments as of March 2026. War brings tragic human loss and economic instability. Please conduct your own research before making financial decisions. Step 1. The energy shockwave. The primary trigger for today's market volatility is the Strait of Hormuz. With 20% of the world's oil supply passing through this narrow passage, any disruption sends prices skyrocketing. Currently, Brent Crude has spiked to $82, a 14-month high, following U.S. and Israeli strikes on Iranian leadership. Analysts at major banks warn that if the blockade remains, we could see $100 to $120 per barrel. For consumers in the U.S. and Europe, this means higher gas prices and a fresh wave of inflation. Step 2. Bitcoin. Hedge or risk asset? How is Bitcoin reacting? Initially, we saw a 7% drop to $63,000 as investors fled to cash. In the short term, Bitcoin often behaves like a risk-on asset, meaning it falls when fear is high. However, look at the 2025 data. Iran used a $7.78 billion crypto economy to bypass sanctions. If the global banking system becomes more restricted due to war, decentralized assets like Bitcoin may see increased utility. The key question for 2026: will the massive institutional inflows from Bitcoin ETFs provide a floor, or will the liquidity dry up? Step 3. Global economy and recession risk. The impact goes beyond crypto. Shipping costs are soaring as vessels avoid the Gulf region. For the US Federal Reserve and the European Central Bank, this energy spike makes cutting interest rates nearly impossible. We are looking at a stagflation scenario, slow growth combined with high prices. This is why gold has already risen 2% to $5,260 per ounce. Investors are hedging against a potential 2026 recession. The situation is developing hour by hour. In times of war, markets hate uncertainty. The best strategy right now? Stay calm, manage your risk, and avoid emotional trading. What do you think? Is Bitcoin the safest place to be during a global conflict, or is gold still the king? Comment below with your thoughts. Subscribe to Finance Investor Lab for more real-world updates. Stay safe and stay informed.